I am SoCar, and it is almost time for the market to open. It opens here in 2 minutes after hours. We're seeing a pretty decent downturn. So what we're going to do is we're going to take my my SPY spread here that we looked at yesterday, or in the previous video I should say, and we're going to close it out. We're just going to claim our profit. With a decent downturn today, it could very easily put it right back out of my profit range. So we're going to go ahead and close this out. We got about 2 minutes or a minute and a half till the market opens. Wait, what? Oh, it wants me to buy. Oh my goodness, that's not what I want. Let's go. I thought I was in my spread. Alright, so here we go. We got this. We're just going to close this out. Good for day. 69 is right in the middle there. Up 6, down 5. Yep. Cool. Sell to close, buy to close. Got it. I don't know why it's not showing my chart right here. Showing the weekly. That's weird. Must be because it's getting ready to open. So let's go ahead and submit that, and then let's also look at my other positions, because initially I was getting ready to close out my downside on the QQQ, but with it turning down I might not want to do that. So I think what we're going to do here is actually close out the upside as well. Let's double check the QQQ, make sure it's got the downturn as well. Oh, it does. Holy crap, look at that. And in order to be in the full profit range, I need it to be at 477, so we're fine. Even though it dropped $1.40 right there. Yeah, let's go ahead and trade some options on this. Let's close out my my good side. We want the calls. Where are my calls? Oh, let's change this out to the 23rd. My calls are right here. My calls. All right, so I'm currently selling this one, buying that one. We're going to invert that, so we're going to buy the call here, and we're going to sell the call here. All right, so 58 cents. Oh, it's moving. 60 cents. Go ahead and submit that. I think we're open. It's 6:30. All right. Oh, it's filled. That's it. We're done. We're out. All right, cool. So let's come back to the investing tab here. Let's see where we're at. See if my other one closed out. It did. Okay, so we closed out of both of those positions. Wow, look at that. The whole chart, that just straight down all the way except for silver. Oh, but the SLV, I'm in a little bit of money now, I think. Yeah, so my two strike points that I'm looking for, 25.50 or 28, looks like we're going to be coming up on this one. And of course it's because it's tracking silver. Silver is a real asset, money is not. And so anything else going down will normally drive up things like silver and gold. So that would probably make sense. Now, what did I get into this at? I got into this at 56, currently trading at 52, so the entire position, all four legs of this, are currently down a little bit, down about 4 or 5 cents. So overall we're still losing money, but let's take a look at silver. Let's come back this way. SLV. Bink. Oh wow, look at that little spike. Good heavens. 5 a.m. open. 26.85, 27. I guess that's only a 45-cent spike, but I mean 45 cents at $27. I mean that's a 0.5% right there. So let's see. Let's just take a look at my individual spots in this spread here, and then investing. All right, so when I closed out those two positions, my my account value bumped up a little bit, made a little bit of money. Where are we at? SLV still has all four, and then the QQQ just has the downside. Let's take a look at this one. So these two cost me 47 cents to get into. Currently trading at 23. Okay, wait, why are the 1 day charts messed up? That's a little weird. So I want the QQQ to drop down below 474 for this particular spread to turn profitable. So 2 videos ago, in the first video I posted in this series, I was talking about how you could, in a volatile market, profit on both sides of a condor. And if the QQQ manages to drop down to this point, we will do exactly that, because we just now we closed out the upper side with some profit. So now we can potentially close out this lower side as well, particularly if that spike downwards is an indicator of what's going to happen today / tomorrow. I wonder if there's some fundamental stuff going on that I don't know about. So let's see. This particular position is down 50%, 53 at the moment, down 25 from my entry point at 47. So hopefully, as the value of QQQ comes down, we'll see that get closer to profit. Hopefully, if not, if it gets at least closer to 47 cents than 20, then we'll be able to close it out for a smaller loss. And that's really what you're looking at when you're doing any kind of option stuff, is managing positions. Whereas with stock, you buy it, you wait for it to go up, and then you sell it when you think it's getting ready to stop going up. And then with futures contracts, you do the same thing. You can make money whether the market's going up or down. You can buy it or short it, but you gotta have your technical indicators. You gotta have your fundamental trading stuff, whatever it is that you do your trading with. You want to get out of the trade as soon as it looks like it's no longer going in your favor. Options are a little different. It's a lot of fun. It's a different kind of beast. And of course, as I mentioned, we should be opening a less small account. I think by most people's definition, the account will still be a small account. It's actually going to be 2 separate accounts, because I'm going to take the seed money and split it into 2 different brokers. I'll probably have most of it in one. We'll probably have one account with around $5,000 in it, and then another one with probably a couple grand. It depends on how much the total seed ends up being, the amount of money that we're investing in this. It could be, I don't know. Well, anyway, we'll figure it out. We'll get there, and we'll talk about it when we get to it. So I will be trading the futures contracts, and that will be a little more intense, because it's a lot more money, a lot faster. With options, in theory, as long as you're confident in the trading rules that you're following, you can fire and forget. I could have just put out this iron condor and then just let it go, and then accept my probabilities that I'm going to make a little bit of money or I'm going to lose a little bit more, and just let it run. You can absolutely do that. You don't have to manage it. But of course, this is your money. This is your livelihood, so you should be managing it. Reduce your outgo and increase your income. I mean, that's the standard law of finances. So let's go ahead and drop over to the QQQ chart. I would love to see this drop all the way down to 474, and right now it's hovering. Wait, that's today. Where's the downturn? Oh, that was probably the downturn. So this one is actually, wait, 205. What is this? That can't be today. That's yesterday. That's after hours. Oh, there it is right there. Okay. So wow, that downturn is tiny. So I guess what happened was it spiked all the way down and then it came right back up. That's interesting. Let's see where SPY is. Oh, yep, it came right back up. I should have sat in it. But that was a pretty sizable downturn, and then, wow, it's just going right back up again. Let's check the advanced here. Yeah, man, I totally could have sat on this until expiration. That's okay, because I claimed profit. The general statement is, you'll never go broke taking profit. So where is my VWAP? Is the pink, is this one. So the VWAP is right here, and all of this is after hours. So pretty much the entire after hours, it was trading below the VWAP, and now it just spiked back up past it. So if we're looking at the 1 week, the VWAP, it'll probably be right on top of it. Right in here. We got that little dip below. Dude, you know what? This is going to be a liquidity clear out. I'll bet you that's what it is. if that's true, if this is a liquidity clear out, what happened was the institution stuff, the smart money, they refer to it as, the big money, institutions dropped down to pick up everybody's stop losses right here. And now they're going to push the market up. But that's interesting because the all-time high for SPY is like 560 something. I mean, it's right here somewhere, max. How far back does this go? To 2001. The all-time high is right now, it looks like. It's right around 560. So we're trading right at the all-time high for the SPY. So it'll be interesting to see if 465, no, that's definitely not it. It'll be interesting to see what happens. If it pushes through that little 460 part, or 560 rather, which is where it was, it could very easily rally and keep going to 562, 565 somewhere. I might even consider getting back in. Actually, you know what I might do with SPY? We're going to go ahead and watch this for a little bit. I'm not going to jump back in yet. I'm not going to my my day job today. I've got some things that I have to go handle here in about 15-20 minutes. So I'll be able to watch the market during the day. And then what we might do is we might do one of those gut spreads on this. Or there's a different one that I was looking at that I might want to open up. No, I don't want to trade SPY. I want to trade options. Okay, let's come back. Trade SPY options. This is something that I was looking at. Where are we at? We're right here. So we're on Tuesday. So Friday is 4 days out, 3 more trading days, I should say, 0 days, and then 1, 2, 3. So I think I would go to next week. Let's go for Wednesday. So let's bump this out to August 28th. And then it's trading right here. Okay, so I would look at a potential spread. And just out of curiosity, I want to see what this looks like real quick. I want this to come up, and we're gonna watch the numbers. So if it manages to stay above that 560, which at the moment it's looking pretty solid, we would want to target something, the 565, the 562, wherever it is we think it's probably not going to go above. So I think we would look at the 565, because if this pushes past 560, like right now, I would expect it to come to 562 without much in the way of resistance. In which case, the next point after this, after it tests the 562, I think my next target would be right around the 565. So if this is my target upper range, which we'll just say it is, I think what I would like to do is try this little strategy here, and I forget offhand which one this is called, but I will want to sell this option right here. So sell a call where I think it's not going to go above. And actually we're going to end up selling 2 of these. And then we're going to buy the one right underneath it. And then we're also going to buy the one right above it. And then we're going to modify this, and we're going to actually sell 2 of them at this point. So this particular strategy, and again, I forget offhand exactly what it's called, but it makes it so that you can get into the market for practically nothing. Downside, of course, is that you need it to close pretty much right in this range. You need it to close above here in order to increase your profits here, and you need it to close below here because you've got your 2 that you sold right here. So if it goes above 565, you're going to start losing $2 on this one for every $1 you're making here. It'll still be profitable, but you'll be making less money. So you want to ideally get it between these 2 points right here, between your bottom call that you're buying and your middle calls that you're selling. So what we're going to do to make sure that we can get 2 of these, because it's either check or not check, we're going to come over here to custom and click down, and we're going to say custom, and all I'm going to do is take this call and I'm going to put a 2 right here. I said I'm going to put a 2 right here. What the? Why are you not letting me put a 2 right there? Oh, that's a buy. I want to sell. Oh, yeah, 565. Okay, I want to put a 2 right here. are you not letting me put it to right there? I can do this on my phone. I tried it out already. What the hell? Up arrow? No. That's weird. Why? Oh, there it goes. What the? That's so weird. So you can see here my total cost, 6 cents, 8 cents. You multiply that out by your 100 shares. I'm getting into this trade for 10 bucks. It's practically free. The downside is, you see in my max loss here, $5. Currently it's $5. We should have just assumed this is going to cost 10 to get into. I'm paying 10 bucks. If it lands anywhere out here, I'm out 10 bucks. If it lands anywhere above there, I'm out 10 bucks. If it happens to land right exactly here at the middle one there, the 565 strike price, if it happens to land exactly in there, I'm up $95. That's kind of cool. It's practically free, which is why I kind of like this particular strategy. It's kind of interesting, and for sure we are going to place some of these trades. I don't know that I'm necessarily going to pick that spot, or that I'm necessarily going to do it with SPY, but I will be placing a couple of these trades sometime in the next day or two, just to see again how you would go about managing these, because I've never actually made this trade before because of that super tight range of profit. I mean, it has to close between 564 and 566 to make any money at all, and it caps right at the 565. So it's very targeted, very specific. Now, I'm pretty good about telling you whether or not the market's coming up or going down. Pretty good. Nobody's flawless. But in terms of picking that specific spot, wow, that's, I don't know. But I mean, you're risking 10 bucks. It's probably worth it. But what we're gonna do is I'm gonna go handle some stuff, and then we'll come back and we'll check to see where everything is. Oh, I'm down 20 cents. Why am I down 20 cents? Oh, I'm back up slightly. Yay. 79.79. Oh, that's $1 right there. What? Oh, 249. Yeah. I was down a couple bucks. Oh, the QQQ. Yeah, and I should probably close out this side of the position as well. Just because, really? Just because that dip doesn't look like it's staying. Why are you not showing me my one-day charts? We're gonna have to load up Thinkorswim or something so I can get my my day charts and watch where this is going. 475. Oh, it's trading. Yeah, right there. And originally I had intended on dropping the downside. It might not have filled yet because when I placed the order last night, it was sitting at 23. So it probably would not have filled yet anyway. I would probably need to be altering it a little bit. So I think I'm going to put it in at 22 and hope for the best. It's probably going to float right around there again today. It is. The week chart does show a little bit of a down. Why does it not give me my day chart? What the hell? Yo. Try refresh. Oh yeah, and it's not dark mode anymore. Oh, there's my day chart. Yay! So market opened right there, and then ding ding bonk. 481. Oh, this is my spread. Oh, this is okay. Yeah, this is my put spread. Got it. So that's the value. Yeah, it dropped down. What I need is my QQQ day chart. Let's pull that up real quick. There it is. Bing, there it is. Okay, so there's the downturn. It was a sizable. It came up a little bit, dropped right back down again, coming back up a little bit. Let's check the advance. Let's see where the VWAP is on this. So again, just like the SPY, during after hours, it was trading almost entirely below the VWAP, and now it's crossed above. So right now is where you would be watching for either breaking back down below it or a retest. And right here is a retest. It went up through, came back down, nearly touched it, and went back up. So this right here suggests that it's going to be an up day. And then let's see, 10 that crossed below. That's a tight range though, in all honesty. Yeah, I anticipate this coming up today, so we're gonna go ahead and close this position. I think the QQQ is going to close above 481 today. Oh, let's go for a disclaimer. I really got to do that. I do not provide financial advice, and you should not make any trading decisions based on the actions that I am taking. Okay, all right. All the licensing and regulation stuff, it's awesome. All right, so yeah, I would expect it to trade there. Let's go ahead and drop my position and hopefully get it, I don't know, 22 cents out of it anyway. Come back into the position. Oh, it's trading at 20, 22, 21. All right, let's submit. Okay, buy to close, sell to close. Okay, we'll claim a little bit of it. Hopefully the 20 goes through. It should. It's trading 18 to 22. It should go through. So that should fill here any moment. I'm gonna put. Oh, I have to put on actual clothing. That's what a tragedy. Not going to work, and I still have to wear shorts. So I'm gonna go ahead and put some clothes on real quick and see if that fills. If it doesn't fill by the time I got my shoes on and stuff, then we'll probably drop it down a penny or two and see if we can get a fill on it. And then after that, I'll take off and see. And I'm right in the range. See, right when that bumped up to 19, I almost would have expected a fill. 17.22. See right there, that would be a pretty decent fill. Now it's less likely. Now it's a decent fill again. I don't know. We'll see. I'm going to put some shoes on. So here's the plan. I'm going to get ready. I'm going to see if this goes through and fills. If it doesn't, I'll probably drop the price down just a little bit. Drop it down to 19. Give it a couple of minutes. But the plan for right now is I'm going to close out the other side of this QQQ. And it's going to close this. And this one we're going to sit on just because... Oh wait, I have all four of them still? 25 to 28. Where is... Oh, I need to see where my individual things are. 25.50 or 28. Let's check silver. SLV. SLV. And it's not quite a 28. It looks... No, it didn't hit it. So it's still trading in the range where I'm not going to make anything on it. If it stays in this range for the majority of today, I'll just close out my position and take my loss on it. But otherwise, if it can come into either one side or the other, either above 28 or below 25.50, then I'll close out my losing position and then I'll ride the one that's making a little bit of money until tomorrow. But the all of my current positions expire on Friday, and so I'm probably just going to close out whatever I've got on Wednesday. I was going to ride the SPY, and now that I see where SPY is again, I probably should have stayed on it, but it's cool. We claimed some profit. We're good. There's never a problem with claiming profit. You start getting into the fear of missing out where you're, oh no, I left money on the table. That's when you start making mistakes. And in fact, that was... a good part of how I blew up my $600 account. So, and oh wait, do I have the video? I will look later. I got to take off. Anyway, there's the plan for now. I'll come back in. I'll probably make another video today. In which case, I'll probably just stick them both together in a single episode, so to speak, and then we'll. It's a little weird that hasn't filled yet because it's right in the middle of the range. Anyway, I'll probably come back in and do another part of the video and just do it all in one episode. So I'll probably see you again here in a few seconds, but at least from your point of view. But for now, there's the plan. Thanks for dropping by. I appreciate you being here. And then I'll see you either in a few seconds or in the next one, however that ends up playing out. All right, we're back from taking care of some stuff. I had to go handle some business and all that. So we are looking at, I closed out my upper half of my spread on the SLV, and SLV is still very much in this little area where I need it to not be. So it came all the way up to 27.29. I needed it to be, actually, I think it just above 27. So, I mean, this one might have been worth something at that point. I think I sold it before then, though. 6:30. Oh no, that's right at open. So I know I didn't get it sold immediately. It dropped down, so I was I lost some money on that position. It nearly got down to the point where well, no, it didn't. I needed it to drop to 25.50, so I needed it to drop another $1.27 from where it's at to be solidly in the money on this one. But it's still just channeling right in that same area. And I could sit on it, but again, we're looking at our time. Let's see here. Let's click on this. Let's go to visualize. The time decay is costing me money. I'm down 20 bucks on this position. I paid 37 for it, so I'm down half on this. So I'm probably just going to close it out. But I do want to take a look at the simulate my return thing. Okay, so here we go. This is time decay in action right here. Assuming that it doesn't go anywhere besides 2688 or anywhere above 2550, anywhere on this chart all the way across is going to be just gradual decline into loss. Oh, that one's actually worth something if it were trading that low. It's not. Let's come back here. So it's just going to gradually lose money as the time goes away, and there's my max loss there at 37. Because it's been spending the entire day today, all of yesterday, just trading in that little channel where I need it to leave, we're going to just go ahead and close it out, which I should be able to do right here. Cost shares, review order, let's double check. Sell to close, buy to close. Yep, let's go ahead and submit it. And done. So 17, it'll probably fill. Probably it's right in there. It says low. It might not be very liquid. There might not be a lot of people trading. We'll give it a minute or so and see what happens. It's not doing much at the moment. It looks like 0 available. There is a bid, there is an ask on this particular spread. I could drop it to the 16 and get out now. We'll give it a couple minutes to see what happens, but realistically it's not going anywhere. So we are for sure taking a loss on this one. Man, we took a loss on both sides of this one because we were betting on it moving, and it just didn't move very much. My the call spread that I had. Oh my goodness! Would you get off me? Hi, short round. How you doing? Such a cutie. Oh my goodness. We have 2 little baby puppies, Short Round and Indiana Jones. Indiana, or just Indy. He has that name because he started adventuring on day 2. He was 2 days old and he was already crawling around and leaving his little box area. And hi, Short Round. Short Round is such a cutie. All right, off you go. But he's also getting stuck on my socks. So we're going to go ahead and close out our position. We did make some money on the SPY trade, the call spread that we had on that. We made it like a 50% on that. So let's go ahead and drop this down. Oh wait, I hadn't done it yet. Wait, what? You can only sell 0 and buy 0. Wait, what? Oh, because I had already submitted it. Clear option. Go away. Let's go back to the investing tab, see what we got. Yeah, it's I've already got it there. Okay, so let's click on it. Let's try to drop it down. Let's say replace. We'll drop it down to the 16 because that should close it out. Bink. Oh, it is 16 now. Okay, go ahead and say continue. 16, 18. No, I want 0.16. Whoops, I said 16. There we go. Review, submit, and that one should close out right away. It filled. We're good. All right, so now I shouldn't be in any positions at all. I think we should be. Yep, we are. We are totally out of all our positions. So let's see where we're at. 237. I think that means overall I'm down $3.50 or something thereabouts, because it seems like I was at 241. So let's scroll up. I was at 250, so I was actually up. Overall, I'm down. Yeah, there we go. So 241 was my baseline. That's what the account had in it. We did a couple of trades. this is as I'm in the market and locking stuff in. So my high point was when is this? 1 p.m. yesterday. Oh, that's before I locked anything in. So I locked in our profit on the SPY right here, actually somewhere in the middle there. And then we continued losing on the SLV, and that's where we just locked everything out. So overall, my account is down about $4. Let's see here, because 241.54, I'm at 237.55. Yeah, almost exactly $4. Really, dude? Get off my sock. Every time you put your claws on my sock, you get stuck. So maybe stop putting your claws on my sock. You're such a cutie. Oh my goodness. Go play somewhere besides my socks. Okay, so what that means is I'm done doing my stuff for the day. I got a couple hours to screw around before I go do my night job. So I might come back and look at a couple of different things. I'm going to actually look at the market. It looks like we're kind of going to be looking at a down day today. The QQQ is down. The SLV came up and went back down, and it's basically where it opened. So again, staying in the channel. The SPY did actually turn around. Let's see, we sold our position basically right here, solidly in the money. It came up a little bit, so if I would have sold it at exactly 7, I might have made a couple extra bucks on it. If I would have sold at 7.45, I might have made a couple less dollars, but where it's at right now is 557.88. As long as it stayed above 557, I would be in the money. Because we've got this downtrend going for today. Remember when we were looking at this yesterday or the day before, we were analyzing the charts, and a couple of the indicators, the RSI, the MACD, were both suggesting that we would see a turnaround of the uptrend. They were both suggesting that we would see this happen. So I think that I'm gonna stand by the decision to close out my position and not write it to see if I could get my max profit on the SPY, because I would need this to close out on Friday above 557. So I'm happy with having just collected my my profit that I got, and it almost entirely offset the loss that we got from the SLV, just channeling. So the downside to Robinhood is that I can't do options on futures contracts because Robinhood doesn't carry that. At least I'm pretty sure they don't. They definitely do not. Like, not even kinda. All right, so, and that's the downside to here, but that's okay. We'll look at doing options strategies on futures contracts when we get our other accounts set up. So for now, man, we're just having fun is really what we're doing. We get to try some new things. We're going to do a couple of these. Is this it? Yeah, this is it. We're going to look at a couple of these different options here, and it's going to be a lot of fun. It's going to be really cool, and we're learning, and it's really not costing us anything. I mean, experience is everything. If you are a new person to trading, you've traded a little bit, or maybe you haven't traded it at all, and the only source of learning you have is watching my channel, is watching other channels. First of all, go watch The Secret Mindset. That's my favorite trading channel, period, end of story. Those guys are awesome. They are amazing. They'll tell you a lot of cool stuff about smart money and how the institutional traders move things in the market. Secondly, hey, thanks for dropping by my channel. I appreciate having you here. If you would be so kind as to drop me a like and kick me a sub, I would appreciate those things. But you know what? It's cool if you don't. I'm glad you're here. I'm glad that we can go through this experience together and learn stuff. So what we will do probably today, since I'm currently out of all of my positions, is we will likely give a shot to a couple of other strategies, like the one we looked at earlier, where we're selling two either call options or put options, and then we're buying the options on either side of that, because it has such a low buy-in and such a low risk. I mean, you're really risking basically nothing. I'm risking $10 to make 90. It's just a matter of trying to predict where it's going to be. But with something like SLV, where this thing is trading in that tiny little channel, It's not really tiny. This is the 1 week. I mean, it's not tiny, but it's definitely trading inside the channel enough to prevent me from making any money when I'm buying options expecting it to come out of that channel. So 19th, yeah, this is this week. That's last week. It's not exactly a volatile stock right now. So maybe it would be worth trying the cheap one on this, because we can. All right, let's take a look. I'm not necessarily going to trade it right now. I do want to do a little more analysis on it before I get into it. But because it's so cheap, I mean, good heavens. Trade options. All right, so looking at where SLV is, I'm pretty confident that they're going to come up a little bit. It's not going to be a lot because they're trading in the channel. Let's come back. Let's see. So the high point here is 27.29. I needed it to go up to. Was it just 27? I think it was. I think I wanted it to come up to 27, and it was already down when the market opened right here. No, it was 28. Was it? It was 25.50 that I needed it to drop down to, and I think 28 at the top. But anyway, let's take a look at the week. So the high point here is 27.22. The low point there is 24.91. That's not a huge spread. It's really not. So the 16th market open is in this general area. The 16th was 4 days ago. So what was that? Friday? Yeah, that was Friday. So I think what we're going to do is, for fun, let's assume that we're going to be a little higher, maybe in the 27 area. Let's cap it at 28. It's not going to be above 28 for the next few days. Let's try that. Let's say options here. So we're going to buy. I'm going to make the prediction that it's not going to come above this price right here. So let's expire this out to next week. So 8 days, that means this will expire next Wednesday. All right, and I say it's just not gonna go above 28. So we're gonna sell this one right here. That's my target. I want this to come up a little bit, but I don't want it to come up above 28. So I'm gonna sell this one here, and then we're gonna buy the one on either side of it like this, and then we actually want 2 of these. So what we're gonna do is we're gonna click on custom. And then we're going to set a unique ratio. And then the one that we're selling is this one here, the $28. And we're going to change that to 2. Why are you struggling with this? There we go, delete 2. Okay, I have no idea why I can't just highlight. I must be dragging out of the box. It must be an HTML thing. So anyway, there we go. So the cost to jump into this one is 20 cents, which is a little higher than normal. It's because this one here is so cheap, because nobody thinks it's going to be coming up to 29. So let's take a look here. Our break-even points are 27.18 and 28.82. So as long as it closes somewhere above 27.18, which it's not at right now, that's pretty much the high point of this morning. So this gives us all week to be able to come up a little bit. But if it stays where it's at, 26.86. Oh yeah, that's the price. That's what the line is for. So if it stays where it's at right now, or drops at all, and closes below where it's at, or fails to come up to at least 27, then we will be experiencing a maximum loss of, currently it says 18 here. Here it says 20, 21. Now it's updated here to 19. So we're risking $19 if it manages to come up just a little over 27.19, ideally up to 28. Realistically, we're not going to see it come up into this area here, because I'm picking this as being where it's at. We're potentially looking at bringing in $81, and that's because this is a $1 spread. Dollar per share is $100. $100 minus what I'm getting in, which according to this chart down here is 19. 100 minus 19 is 81. So that's your max profit. Now for fun, let's instead buy, well, no, we don't want to do that, because then I'd be buying one in the money that'll offset everything. Or do I? Do I want to? Nah, because that'll make it really expensive. I'm saving $4 here, but... And I think that reset that to a single because we don't have the spread here. So let's go back to custom, set a unique. Oh no, that is 2. Okay. So still selling these 2, but then spreading it out farther. So not buying the covering call until 30 and then buying down this in the money at 26. Well, that's interesting. I like how that changes everything. So my break even now is 26.87. Oh, my break even is almost where it's at. Okay, so by doing it this way, okay, let's take this guy and put that one back in. Let's see how that changes. Okay, so for this to be profitable, by buying this closer one here, I would actually need to have the price come up 10 cents. Anything over that is profit. That's interesting. Maximum loss is 97. Oh, that's because I'm getting into this for $100 because I'm buying in the money. Huh, that's cool. All right, so anyway, let's leave it at this. That says 2. Okay, we're good. So at the moment, this is costing $38. Really, 38 cents to get into. That's interesting. Huh. And the way it's at right now, it's not the little pokey triangle thing. That's interesting. We'll screw around with it more. I'm going to take a look at that option. I'm also, whoops, just kidding. Go back to sell, take that out. Okay, so now we don't have any options. I'm also going to look at the inverse. Now, the last video I kept saying the word straddle. What I meant to say was strangle. They're basically the same strategy. The only difference is let's show a straddle and then we'll show a strangle. A straddle is, I'm going to pick a price point, and the 27 strike price is slightly closer to the money than the 26. So let's go ahead and pick that one. I'm going to buy a call at the $27 strike price, and I'm also going to buy a put at the $27 strike price. So this is a straddle, and I was using the word straddle, but I was actually meaning to say a strangle. And the only difference is the straddle, you're using the same strike price for your put and your call. I would be getting into this for 107, so my max loss, according to this down here, is 107. As long as it comes up above here or below there, I'm going to make money. This is not what we want to do right now because SLV has been not trading wildly at all. It's staying in a very narrow channel. I would almost be willing to, instead of a long straddle, go a short straddle where I would sell those two, but we're not going to do that. So that's what a straddle is. Let's take the check out of this box and put it here. This now is a strangle. So the only difference is instead of both being on the same strike price, now they're offset by 1. I've got a call here and a put here. And so it looks like this. With the strangle, long just means I'm buying it. I'm buying this one here as the call, and I'm buying this one here as the put. So as the price drops anywhere below 25.35, I make money overall, and if it goes above the 27.65, I make money overall. So what we want to look at though is the other strategy where we inverse this. So instead of buying this this strangle where I'm one step out of the money on both ends, instead of buying this put, clear my order here, I'm going to buy this put. I'm going to buy the put that's slightly in the money and then buy the call down here that is slightly in the money. Now these are both more expensive, and so my cost to get into this is $1.67, but if you look, my maximum loss is only $65. So it's going to cost $167 to open the position, but because one of these is always in the money, it reduces my maximum loss from the 167, in this case down to 65. So worst case, I'm out 65 on this. And with this particular strategy, and I think this is the one that they call guts. And we're gonna open this position at some point, but we don't want to open it on this one because this one isn't volatile enough for us. Because in order to break even, I need it to drop below 25.35 or go above 27.65, which is even worse than the position that I already had. So we don't want to do that. But we would do this on something a little more volatile. but we're limiting our loss to like half or less than half of what it's actually costing us. We're paying the 167, so normally the 167 is our max loss, but in this case it's only 65. And then your maximum profit on either end is theoretically unlimited. So you're not capping your loss on this, or you're not capping your profit on this, but you are limiting your loss. So this is kind of interesting. I'm definitely going to trade this on something at some point in the future. And I think, what would it look like if I then also bought, let's see, buy a call. If I buy this one, oh no, we don't want to buy, we want to sell. Let's sell, because we want to reduce our overall cost. Our cost here is $1.67, max loss is 65, just to see what happens. Let's sell this one, and then also sell the put. Oh wait, just kidding, we don't want that. I'm buying this call here. I think that'd pretty much nullify my profit though, wouldn't it? Sell, and then I'm selling that put, so I'm gonna, all right, yeah, I'm buying that one, so let's sell this one. I'm guaranteed to just lose. That's awesome. I like screwing around with this stuff. It's a lot of fun. This is where you learn some things. You can develop some strategies here. That's interesting. All right, so this is the call that I have. Supposing we go up to here, let's sell that call. And then let's also sell this put. That's the put that I have, so I would want to sell like this one. Okay, so now it looks like an inverted condor, and it just says custom, of course. So it looks kind of like either the inverted condor, or I think this is a short condor, a short iron, I forget. But we're inversing these two positions right here, and then we're still selling our coverages out here. So what we're doing is we're spending $1.46. But instead of $1.46 being my max loss, it's actually 43 cents per share. And then the profit is being capped at 57. That's kind of interesting. We're going to look at that. Anyway, I'm going to go do some stuff. I'm probably going to actually screw around with looking at different things. I'll come back in the event, whether that's today or tomorrow. I'll come back when it's time to place another trade, and we will show what we're doing. I'll explain whatever strategy it is I'm looking at. Both of these two strategies that I just showed, if I call this one here, yeah, where we're doing kind of a reverse inverted strangle, kind of that strategy, and then also the other one I was looking at. We're definitely going to trade both of those, because I want to see what they work like, how we would manage them, and that sort of thing. So but again, if you're a relatively new trader, if you haven't started trading yet, this here that I'm doing is absolutely hands down the best thing you can do. You're gaining actual experience. You're trading real money in the market, but because you are dealing with options, because you're dealing with specified risk, you're paying to play, but you're not paying very much. I mean, yeah, my account is down a couple of bucks, but it's only down a couple of bucks. I mean, from today, my high point today was 250. From there, I'm down 37.49. I'm down 12 bucks. Overall, I'm down like 4. Is that right? 241. 230. Yeah, I'm down 4 bucks. But look how much fun we got to have for 4 bucks. I mean, you can't even go down to any of the casinos and have that much fun on roulette with 4 bucks. And roulette's my favorite, and I live in Vegas, so of course I'll be making lots of gambling jokes. But anyway, we've closed out our positions. My small account is down a little bit. 1.65% is what we're down. Oh yeah, $3.99, almost exactly 4 bucks. So we're down 4 bucks on my 241 original position here. But we're getting some experience. It's a lot of fun. I'm glad that we're doing this. We will definitely continue to do this, and I'll continue to keep everybody posted so that we can all learn from the things that I am doing. Hopefully, we'll turn this red line green and then continue to turn it more green. It'll be fun. So thanks for coming along for the adventure. I will see you in the next run, the next step. I'll see you in the next video.